Excel accounting practice problem. Reversing entry, accrued interest. Get ready because we're about to excel. Here we are in our Excel worksheet. In prior presentations, we put together the worksheet from a blank sheet. Now continuing to enter transactions into it. If you have access to it, there's two tabs on down below, an example tab and a practice tab. The practice tab starting out where we left off last time, the example tab in essence being an answer key. We're going to be staying here on the practice tab this time. In the prior presentation, we entered a transaction to record the accrued interest or interest payable. Now we're going to be doing a reversing entry. So to consider that, let's first go back on over and see where we picked up this information. I'm going to hide some cells from the AS column all the way over until we get to our amortization table we put together. So I'm going to scroll all the way to the right past the GL, the subledger for inventory, the payroll stuff, and then here's my one amortization table, and then I want this second one. So to HV, right click, and we're going to hide all that stuff. Hiding that stuff. I can hide H2. I don't need H either. Hiding H or whatever that H something. So there we have it. So now we have the information on the right hand side. We basically said that half of this interest should have been recorded in the month of February, even though it's not going to be paid until March because 15 days of it had been incurred in February. Noting that that's a fairly small amount, but again, we can see the concept from conceptual standpoint that it could be a larger amount depending on the size of the loan and so on and so forth. So that's what we did last time. Now, what we would like to do now is reverse it. What we're thinking of now is that going to mess up then my accounting department as they go through the normal process? Now remember, what the accounting department is going to do with relation to the loan will typically be recording the next loan payment, which will be this item here. What's the journal entry when they do that? They would normally say, okay, I'm going to say cash is going to go down, and then I'm going to have interest expense, which would be a debit of normally the 146, and then we're going to say we also have then the loan balance going down. So loan payable would go down by the amount of the 1619 about, and then the cash would be going out for the negative sum of this amount. That would be the payment. So that would be the normal journal entry. And that's difficult enough given the fact that there's not just two accounts impacted and the interest and the principal will be changing as the loan payments go down significantly. But now we've got this loan on the book. So if I left this accrued item on the books, the bookkeeper might say, that's kind of throwing me off. What should I do with that? You could tell them just leave it there, right? Just leave it there and we'll fix it kind of next time and just record your normal item. Or they could say, well, I'm going to fix it when I do the entry. So then the entry would be changed. You'd say, okay, well now I've got this, I know I've got this interest payable that I got to take off the books. It's on the books at a credit. So I'm going to then debit it to remove it. And then I'm going to have the interest expense, which would be, it was going to be the 146 minus the 73. So that's the current period's interest that we would record. And then you've got the loan payable, which is going to be still at the 1619. And then the cash, which is going to be the negative sum of these items. So you can see we add a pretty significant level of complication to a calculation that's already a little bit more complicated than it needs to be or often would be for just a cash payment typically, because there's 3 accounts affected and now you got the 4 accounts that they would have to pick up at the point in time that the payment was made if they were going to account for this $73 and then properly put in the current time period the interest expense not being the full amount of the 146 because they only incurred 15 days of it in the current period and the other 15 days should be in the prior period. Now the problem is we want to make the data input on the accounting side as easy as possible. So what we would like to do is say, I don't want the accounting department to have to worry about that. I want them to be able to enter the checks as fast as possible. So I'm going to reverse it. Now when I reverse it, I'm not going to reverse it as of 3/15, which you might think I should reverse it as of 3/15 because that's when the payment is going to be made. And that would mean we're on an accrual basis or closer to it basically for a longer period of time. Or in other words, you could think on a perfect accrual basis, we should be accruing every day, how much expense we have incurred per day. We're not going to do that because that would take way too much work for the benefit we would have. We could say, well, I should reverse it on 3/15 because that's when the payment would be made. But we don't want to reverse it on 3/15 because that would mean that I'd have my reversing entries scattered across the next months. So what we're going to do is do all of our reversing entries as of the first day of the following period so that we know where they are at. It will result in something looking funny as of the first day of the following period, and it will net out and be correct as of, in this case, 3/15 when the payment is going to be made. And we'll have that 15 days of kind of funniness looking at the books, but it's inconsistency with what we're trying to do, which is to make the data input as easy as possible on the bookkeeping side, and still periodically, monthly in this case, could be yearly in some cases, make the adjusting entries that we need to do for presentation purposes. So to do that, let's see what it would look like. I'm going to post this over into the far column on the reversing side. I'm going to call this, remember the date needs to be 3/1 this time, and I'm going to say REV for reversing entry. Now you could put the debit on top and the credit on the bottom since it's only got 2 accounts. But a lot of times with these reversing entries, especially as they become more complex, it could be useful to just keep the same top and bottom account here and then just change your debit and credit, meaning I'm going to put the interest expense in the credit column and take the negative of this number. I'm going to put this one should be interest payable down here and take the negative of this number. And that looks a little funny from a debit and credit standpoint because now I got the credit on top, but it'll be a lot easier, especially when you get to longer kind of journal entries, when you're reversing something like an invoice, which we will do later. Then the tediousness of having to put the debits on top can be confusing. You can always then rearrange it if you would rather do so for presentation purposes in another journal entry. But what you would like to do is stack it up in the way that it's most clear to you. And oftentimes, if I just take these same top to bottom accounts down here, it's more clear to me that what has been done, even though it looks a little bit funny in terms of the credit being on top. So that's how I will do it here. We're going to say the interest expense is going to be a credit. That should look funny. That should look unnatural because expenses usually only go up in the debit direction. But that's why this is a reversing entry. We're going to be over here in AP 38. This is going to be equal to, and we will then pick up the interest expense of the 73 and enter, bringing the balance on back to 0. And of course, we're out of balance in the AP column as well. Then we're going to take the other side, interest payable. We will reverse it, so it will then go back down to 0. So we're bringing it back down to 0 here for the first day of the following period. There it is. So that brings it back down to 0. So what did we do here? We made it correct as of the year to date, as of the cutoff, February 28th, and then we reverse it after the first day of the following period, which looks funny. This looks okay. The interest payable back down to 0. That shouldn't throw the bookkeeper off. The bookkeeper might say, well, what is this negative expense account? That doesn't look right. And we're just basically going to say that that's okay. It's a reversing entry. It will net out. It will be correct, in other words, once you make the normal payment as you normally would according to the amortization table on the 15th. Why? Because when they make that payment, which is going to look like this, that we look like over here, they're going to be having a debit of the 146, the full amount on the interest for the next payment that has accrued, but 15 days of it should have been in the prior period. When they post this 146 here, let's just do it real quick just to see it. It will then net out to be the proper amount. So we're going to say right there, they want this one, 146. It'll net out to be the proper amount of 73. And I need to adjust my formulas here because these formulas should be picking up just the activity, this cell right there. So I'm not going to sum up the activity. I'm just picking up the blue cell, the light blue cell. So then if I bring that across, it should be just the 76. We're out of balance because the other side would be recorded as well. We would have to also record to the loan and the cash. But you could see that this then would be great because now we got half of the interest was actually incurred in the current time frame. Now you might say, of course, the next payment that we would make, we have the same problem because it's not going to be made till 4/15, but the interest is only 99. There's a significant difference in the interest. And again, loans could be set up in different ways, so you're not going to have the same adjusting and reversing entries from period to period, but we would have another adjusting entry possibly for half of the 99 that wouldn't be paid until the end of the following period. So that's how the system would go. I'm going to unhide this item down here, or let's remove the added one here so we can say, okay, there it is, and then bring it back. We're back in balance. And then again, you might want to put a note. You might want to put a note if you're working on these kind of worksheets, so that you want to be able to see, a supervisor can see it, and also if you are, whoever's picking it up next year, you'd like them to be able to see what you did. So I'm going to not have a comment. I'm going to say, let's put a note and say reversing entry for, prepaid insurance as of 3/1, something like that. It's pretty self-explanatory, but the notes can be useful in your worksheets for yourself in the future when you go back to it, for people that are going to be working with you, and also so that you can convince your bookkeeper to come up with a good system between what you are doing in the adjusting process and what they are doing in the bookkeeping process, and which journal entries they need to input and how they might need to put into their system that you had to put together to make the financial statements right and or do the tax return.